This critical metric, which has accurately predicted every major Bitcoin bottom, just flashed again. Why now, as gold nears its all-time high? Analysts are noting a rare divergence. Gold's surge, its best year since 1979, contrasts sharply with Bitcoin's recent dip and liquidations. However, historical data suggests this divergence often precedes a significant capital rotation, hinting at a potential upside correction for Bitcoin. Despite Ethereum's growing dominance in real-world asset tokenization and JPMorgan's major endorsement, its price is surprisingly falling. Ethereum now commands nearly 70% of the RWA tokenization market, with over $12 billion TVL, further validated by JPMorgan's selection for its first on-chain fund. However, despite these strong fundamentals, ETH price has dropped, with technical analysis suggesting a potential further decline towards $2,000. Bitcoin just tested $85,000 support, triggering over $169 million in liquidations as the market braces for crucial U.S. jobs data. Macroeconomic pressures, including cautious Fed rate cut expectations and institutional outflows, are driving this volatility. Analysts are divided. Some foresee a further drop to $75,000, while others believe $85,000 could hold amidst extreme fear in the market. The crypto market just saw a massive shakeup. Bitcoin and Ethereum plunged up to 7% in 24 hours. This triggered nearly $600 million in forced liquidations across derivatives markets, with the global crypto market cap falling almost 4%. Market uncertainty, global risk-off sentiment, and U.S. regulatory delays are key factors driving this downturn. This is big. Solana's co-founder just revealed the network secretly absorbed a 6 terabits per second DDoS attack for weeks with zero downtime. This industrial-scale assault, peaking at 6 terabits per second, saw transaction confirmations remain at 450 milliseconds, a testament to its engineering. It's a stark contrast to past outages, with the co-founder calling this newfound stability a bullish sign for the network's future. Imagine your crypto wallet suddenly becoming a universal remote for all your digital assets, eliminating the need to juggle multiple apps. MetaMask, long known as an Ethereum-centric wallet, has now officially rolled out native support for Bitcoin. This significant update empowers over 30 million active users to directly buy, swap, send, and receive BTC, greatly simplifying multi-chain asset management. Despite Bitcoin's seemingly flat price action, crucial on-chain data reveals a surprising shift in market dynamics. Beneath the surface, selling pressure is fading, and large institutional holders, or whales, are quietly accumulating, much like a hidden hand collecting assets before a big move. While macro factors like central bank decisions and labor data loom, a decisive break above $94,600 is crucial to confirm the bullish outlook towards $100,000. Top analysts are divided on Ethereum's recent 5% plunge below $3,000, sparking debate on its true trajectory. Macroeconomic concerns and technical weaknesses pushed ETH below the critical $3,000 mark and its 100-hourly simple moving average. However, some see this as a crucial test, with a bullish long-term structure and relative strength against Bitcoin suggesting potential for recovery. If you're watching Ethereum, new data reveals a critical bullish reversal pattern forming, signaling potential significant upside. Exchange balances have plummeted to historic lows, indicating institutional accumulation, while spot Ethereum ETFs have resumed significant inflows. Technical analysis reveals a multi-year inverse head and shoulders pattern, targeting a potential 15% upside towards $3,600. Despite major stock market rallies and Fed rate cuts, Bitcoin is surprisingly struggling to break key resistance levels. This unusual market behavior is driven by significant selling pressure from long-term holders and a rotation away from tech stocks after disappointing earnings. Consequently, Bitcoin's correlation with the S&P 500 and Nasdaq has dropped to yearly lows, indicating a distinct market path. Bitcoin just plunged below $86,000, but one major player is actually increasing his holdings. What's going on? Macroeconomic uncertainty, slower Fed rate cut expectations, and AI stock weakness are driving this crypto market downturn, impacting even Bitcoin miners. Despite the short-term volatility, analysts suggest Bitcoin's market structure is shifting towards long-term patient capital, making it more akin to digital gold. Major dispute is shaking the Aave ecosystem, raising critical questions about decentralized governance. Aave DAO members are clashing with Aave Labs over who controls an estimated $10 million in annual fees from the CounterSwap integration. This conflict highlights the inherent challenges in DAO operations, where developer interests and token holder benefits can diverge.